Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So from yesterday to today, no change. We talked about the idea of going sideways, low liquidity over the weekends. Just to note, this entire range, points of control, you have 1, 2, 3, and 4 right here, which we happen to be just below. So does that mean we start to go down into the regions and hit this 236 off this rejection of the 382 of the diagonal pitch fan we've had price in for some time? I have no idea, but let's go check out the liquidity of high block. What is that? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are. So let's go do that now. So since yesterday, our live stream, we were talking about the idea of possibly coming up eventually to these pools of shorts to the tune of 16 billion. Now, is it what is the amount? 17 billion in short liquidity imbalance on this 1 minute chart. As we lose some of the characters to Father Time, we will see this change, obviously, but as it stands right now, we have the pools up above in the realm of 227 million at 26,436. Come on now, it always likes to do that sometimes. 227 million at 26,436. That's stacked up nicely with another $126 million pool, which is currently underwater here. This underwater pool of shorts insinuates that they will go stab up to this region. Perhaps they've already taken out the 50x pool up here. Rest in peace to those guys.
Fatality.
But now do they proceed to take out their 25x characters and partners in crime alongside this guy? That could be possible, and there is a 100x pool of $242 million characters up here at 27,033. So we could go up into that region at some point during the weekly candle close. Let's go ahead and expand our vision to the 7-day. 7-day, however, has these pools starting to percolate down below. Let's go ahead and change the filter to max liquidity, not relative, and see this is basically 10 billion in this range down to the sub 25k region on the 7-day time frame. There is a pool percolating up to that 28k region, which they could come back to after a stop loss hunt, perhaps. Let's see what the monthly time frame insinuates. Oops, gotta log back in. Give me a second. I don't know why I did that, but okay. Alright, we're back. So we go back to the so coming back to the alright, so we'll log back in there. So coming back to the monthly time frame. Monthly time frame has come on now, the relative. Go to max. So the max liquidity, there's double digits down here in the sub 23.6 region. After that, I don't know. There's also these sparse pools starting to percolate in the 28k and above that probably total equal amounts to that region. On that spike down here at 24.5, since that range, it's been building a double percolating pool down with the liquidation point at 23.5. Interesting to note, if we go to the 3-month time frame, there is that it's getting hotter in that double digit range down at 24.2 and below. So these imbalance on the 3 and 6 month is to continue to the downside. This 6 month has $181 billion down at 24.3. If you go to the 2 year, this totals to $240 billion down at 23.6. So if I were a market maker, I'd just say don't mind me and take that, and then I would go back up to this region after. I wouldn't leave that on the table personally, but I don't know what I'm doing. But same thing goes here. They left some $100 billion on the table twice. Even here it was up to $143 billion before they shifted out in November. So they don't necessarily have to clear the entire range of liquidity before they go up. If these are protected zones of market maker positions, then maybe that's why they don't touch it. But they did grab this one at 24.4, and they sure as heck might take that as well. So that's to note at 23.6. So let's go ahead into the Binance chart to make sure we are squared away on where we could go and what we were foreseeing perhaps yesterday. Alright, so let's turn on the momentum and see what is going on. Link in the description for more. Scroll down to features, toggle at your leisure. All the components at Bitcoin's bottom for the schematic of what we look for in terms of rocket ship continuation off the cloud, boom, to the upside. And this, you can read about each component if you like as it comes into prominence. So yesterday, what were we looking at? Yesterday on the 15-minute, I believe, no, it was the hourly, was it? Hourly, I think. Hourly time frame. No, was it 15? Must have been the 15. Ah, yes. It was the 15-minute. So yesterday we were around here, Asian session. We were talking about the flipping of the cloud idea and continue to the upside off of this cloud curvature and the change of the cloud. So one thing you could have seen, despite us not being live during the New York, after this Asian session, see Asian range, into London, they held the range and this cloud maintained the price action. Price action bounced off the cloud not once, went a little bit below it here, but then came back. Third bounce off the cloud, continuation to the upside. We were talking about going up into this region, talking about these ranges over here. Came back into that range, basically to the T, to the bottom of this candle, and that was at 25,987. So if you had gotten in at any, let's just say frugally, you get in off the cloud here, that would have been like about 1%. If you did like a 5x leverage, which is frugal, that's like a cool 5% off of that little play there. You set your stops in the profit, be frugal because everything's slightly bearish tones right now, and sell off into the into the momentum. So that's done. We're seeing this cloud curvature. This is what the curvature can insinuate, a shift to the upside. Now we're getting a pullback. Does this continue with strength? Let's go ahead and remove this stuff and reset fresh and clear. So fresh and so clean. Let's go to the daily. Shout out to everyone watching, any and everyone. So if we have this daily time frame, we got this rejection off of the super trend / cloud. This is the thick cloud here. One thing to note is that it is starting to curve in this manner here. Similar to the 15-minute, everything's fractal in nature. Does this mean the daily will peel out at some point after grabbing some liquidity and come back up to test this again for a potential double bottom event? I don't know. Let's go ahead and look at the momentum on the daily. So the daily is currently at the value of the 50 level, 49 for the D line, K line at 64, or conversely, sorry, K line at the 47, D line at 64. So at the 20-minute mark from now, the daily time frame will reset. We talked about how the stochastic probability from volatility waves reset from stochastic closures. So the closure of the candle on the daily will then update this, and you can see where it moves based off of the look back of all these candles. We also have, I believe, a 5-day closing now. So this 5-day candle is looking to reset some more of the Williams. We are currently beneath the cloud on the 5-day. This is the first time we're beneath the cloud since basically November. So we came back above the cloud, bounced off it very nicely in the golden pocket region here on March 7th during the Silicon Valley Bank failure event. And then we bounced off the hue of the outer range of it here in June. And then now we went beneath it and bearishly possibly retest and fall lower. So this insinuates with the idea of going to grab that liquidity down at the 23K region. So even if we see a bounce, it could be a short-lived bounce up to a region only to continue lower. What did I just delete? That was a fib line. All right, so we'll just delete that. But yeah, you're beneath the cloud on the 5-day. You also broke the super trend level that's been respected since January 11th on the 5-day time frame. So the super trend on the 5-day has been negated. Bullish trend over on the 5-day time frame. If we go to the 3-day, 3-day broke the super trend there, but reclaimed it in June, but also had the bounce off the cloud, broke the cloud. So even if you come up to this region, this cloud is getting mighty flat, insinuating you might come some lower. One thing countermining that idea for going down lower and possibly bouncing to bearishly retest the cloud is this reclaiming of the baseline. We went over the baseline crosses and how the baselines are your first sign of reversal. You can read about it here on the website. They're your first sign of reversal. One of the few leading moving average formulas you will find on the market. On April 16th, we had this cross down event which suppressed the price action for 60 days on the 3-day time frame. This happened again July 24th. We said watch out for that idea, and sure enough, it has suppressed the price action for 39 days thus far, and to the tune of minus in total minus 16%. So not to be ignored. When they start reclaiming the baselines and the baselines start to cross up, it gives you another idea of something else percolating on the other side of the equation, similar to here when we had these 3-day candles closing above the cross up with the momentum going higher. You had this 3-day cross up event which signaled a large move to the upside. So it all started back here in December, and they built up cross up, cross down, cross up, everything coiled up, crossed up, closed, and it was gone from there. So the 3-day time frame also noteworthy. If we go into the momentum for the 3-day, it's already getting oversold multiple things. Williams also nicely oversold. The last time it was in that region was back in June when it started to surge up there. So I'm liking the 3-day reset thus far. Daily time frame. Daily time frame crossover event has been gave that nice pump to the upside, which we were talking about on Tuesday on the 6-hour. We reclaimed the cloud on the 6-hour, and that was a nice little 5% plus gain from there. Still holding the baseline for that on the daily time frame. KB lines coming down as we just talked about. Williams holding just above the oversold region. And if we start to head lower into the time frames, we see the 22 starting to wind up here, getting oversold on the stochastic, money flow RSI beneath 50, and the Williams coming to a oversold state. Let's go see what's in the cards for the cloud. So the cloud is also getting this nice curvature idea. Let's go zoom up in on it very quickly. Also starting to thin in a certain manner, still quite thick, but that can change as it comes up into these pools, and then you can get this kind of bearish, you can get this retest off the cloud idea. If this starts to thin in a manner, it would need some conviction to come up above the cloud, reclaim these pools we talked about, and then you could find a more patient entry perhaps there if that's what you're looking for, if this starts to thin on the 22. The bottom fishing one sometimes gives you false hope, so finding the conviction of the shift, pullback, strength, continuation idea is what we could possibly be looking for. Alright, so this is starting to thin off in the selling pressure on the 22-hour time frame. You do have a cross down event, which is from back here, to note that we are beneath that baseline. Everything's oversold, but it could dip a little bit lower. Let's go ahead and go into the 12-hour really quick. 12-hour time frame also crossed down as of Saturday. So this is negated in terms of that. So we have to fight off the subtlety of the downside pressure being applied to this full reset of the momentum here to that last leg down. No volume as of late, obviously weekend price action. Also, you have a complete closure of the markets, no business at all on Labor Day. So this is basically a 3-day weekend. There is, even though the weekly candle close will be in effect, it could be a lackluster close going into Labor Day for Americans. Hope you guys enjoy a barbecue or two before summer's end. And the 6 hour is starting to get oversold here and give a little bit of push here, but weak for the weekend volatility. MACD starting to give the impression of crossing up here, not yet at that level. Baselines have had you cross down since the drop here. This is when we were talking about the retrace idea back on Thursday, midweek reversal. It was par for the course on Thursday. Wednesday we had this rise up. Tuesday we had the rise up. Wednesday consolidation. Thursday I was saying we should retrace into some of this candle, and we gave it all back. So this cross down event on the 4 hour was what had you at hello. Now we're seeing the opposite effect of the 4 hour. The 4 hour potentially crossing up again on the baselines. So the baselines scooping up the price action in a manner here. 4 hour time frame is oversold. Everything looking nice in this low oversold pocket region. Money flow beneath the RSI starting to come up here with the KD lines. What does the reset of this 12 minutes of the 4 hour candle, what is it going to cause the KD lines to do? Sometimes it does some random thing where it puts it all the way up at 70 or something, and it never really went anywhere. Just by having a green candle close with no price action increase causes the momentum to surge up and give that impression of weakness. This is why we talk about things going sideways while things get overbought without doing anything. That gives the impression of weakness to the price action. But all of it has to do with the candles prior. If you know the formulation of stochastic RSI, it's a look back on these candles and a look back on the RSI, and then they find that probability from the volatility of the changes within the RSI and the price action. So looking at the hourly, so slight interesting reclaim on the baselines for the 4 hour, which is also reclaimed on the hourly here for the cloud thickness. Thickness is still pretty bearish in terms of the tone, and the angle is still looking to curve down, so you could possibly break down at the cloud and continue lower. So this angle is not thinning and turning up just yet, and we have not broken the bearish super trend from back here on Friday, September 1st. So this hourly cloud needs to show us some insinuation of upside. We're getting bearish divergence on the RSI, bearish divergence on the money flow back here. The MACD has entered the domain of the stochastic RSI, so this could be continuing up higher and pinning this again on the hourly time frame. Once again, we are on the low liquidity weekend. $15-minute. So we're getting some six time frames oversold, 5 time frames oversold signals. This is kind of what you see at the bottoms of things. This is the bottom of Bitcoin at 15K. We had rocket ships back there in November, and this was what it looked like. We had the 5s and the 6s, and those are generally good ideas to look at unless there's some sort of news manipulation event or something, like SpaceX selling off all of their Bitcoin. So you got shoulder, head, possible shoulder to continue higher, but looking at some liquidity, so far sparse in what has been induced for the longs that opened up into resistance here. The imbalance on the 1 minute does suggest coming up to these pools we outlined for you yesterday. Basically not much changes from yesterday in terms of ideas for going to the upside here. Just testing out the different theories of what how the momentum has shifted and changed and undulated, and how the cloud angles are changing here and then on the daily as well. So you need to reclaim that and in order to continue. Let's go ahead and take a look. Oops, why is this? There we go. Let's see what you guys have to say. Anyone? No? All right. So we're going into the total market cap. Total is also experiencing this pretty much the same pattern, of course. Down at the 2 level of the bearish trend base fib levels, holding that nicely, slightly below it now. So if we look at this as a continuation idea, we can delete this now, I think. Boom. And then you could basically say if we are going lower, I mean, that's where you stand if that whole like FUD with the Binance thing goes forward. We could be going down into these regions as a continuation down from that. Let's go take a look on a higher time frame and see if we can do, yeah, basically impulse retrace. This is the daily one. So let's just delete this really quick and then look at the daily level here for total. Impulse retrace. So this 236, you couldn't get above the 236. Boom, boom, boom. Down here came down to the 786. So this one is a more swing idea level. So we can look at that here, where if we come down to that region, the next point in the charts would be coming down to basically coming into these regions here, just sweeping the range from here down below, and then you have this pocket down here. That's on the daily time frame. Now the daily time frame, if this resets in a hard manner, this one we already played out to a T, so we're going to delete that and look at this again, looking back on a further scale. So this entire swing to the downside, the retrace to the upside, the 236 holding here, coming down. We have yet to come into those regions for a swing idea. So if the total 3 comes down, it would possibly come down into these lows down here. Okay, so let's go into the dollar yen. It has yet to open, obviously, so this will be on Tuesday most likely, but coming up into these regions, hitting the range high, coming back to spike down. It's expressing interest in coming up some more, perhaps, as a lot of companies started to double top. We had the nuke on Nvidia talking about it coming back down again. If we go to the 3-day on Nvidia, outside the Keltner channel, could come back to that super trend level. And Q is starting to do very much of the same after taking out some of the monthly fair value gaps. Let's go into the gold. Gold came back to the cloud to retest some of the liquidity in this BPR fair value gap, balanced price range. Fair value gap on the 3-day came back to the candle, just not yet above that range. We had those rocket ships takeout we were looking at before. So as Nvidia and other places were experiencing a retrace, gold was, people were investing that profit into gold as a store of value. So a retrace up into some of these regions, these candles taking out some of the liquidity here before potentially heading lower, and that reclaiming of the cloud on the 12-hour. If this cloud angle and this amount in which it's getting thinner from back here starts to continue at this angle here, you could be seeing some sort of shift out at some stage. So this would put you on Thursday of next week. So this could be basically happening up leading into Tuesday, and so it may not occur right away, but this could be leading into next week. You do have some more potential downside coming down to liquidity grabs, so it doesn't mean get in right away, but just the idea of insinuation of trying to hold this range potentially to go up, and this cloud shifting on the 6-hour starting to taper here. Obviously weekend, since Friday, Saturday, this shift back down is the interest waning because of the 3-day weekend. But if it holds this range and then starts to shift back out, this is where you saw the shift. And we were talking about that back here, this idea when this candle closed above that cloud. I was like, yeah, that's possibly insinuating upside, and sure enough, 12 hours later you got some upside. So we'll be here for it either way. We'll be back for the weekly candle close in a day's time. It's just your Sunday update, small, short, but sweet, hopefully. Please enjoy your time with friends and family. We got the 3 minutes till the candle close. We'll stick with you until that time. Got the 6 time frames oversold here. Now this 5 and 6 closing on lower time frames doesn't have the same power as it closing on a higher time frame. This is not a candle close. This is a candle close specific formula. Let's read it. Determining exhaustion points across all the significant time frames with the candle close specific formula. It gives you leading information as you go lower in the time frame, as numbers of each symbol represent the time frames in alignment. Notice the rockets and radiation symbols at key reversal ranges. So you have these on the 15-minute, but they kind of exhausted themselves within that 15-minute structure. So if you go to a hourly, it did close 5s on the hourly. So the higher the time frame these close, the more expression of that elasticity stretch of that exhaustion. So if it has an extreme close, similar to here where you had the 5 time frames exhausted on the 6-hour, this started to bring that idea of possibly coming back up into this, because it was so intense to close a 6-hour candle on that time frame. This happened also with 4 here. Now here's where we had that kind of reset fake out, and then Tesla sold off their, not Tesla, SpaceX sold off their Bitcoin in this region. So it's not 100%, no strategy is 100%. When we went over here, when this was happening, I showed you the times where manipulation occurred and these did not play out, like back in May with the Luna liquidation event, brought to you by Vanguard and Gemini and BlackRock. So when these manipulation events and these short drills to the downside occur, a lot of the time it's a manipulation of this, but this does not mean that what it's showing is wrong. So it's an alignment of all the time frames that normally are significant with the stochastic probability waves. So yeah, when they do play out, it's pretty good. It's at least 70% accurate, I would argue, if you back test them. So with proper risk management in mind, it is a pretty decent thing to look at. So we did get the candle close here, the 4-hour. This crossed up the candle here, so the candle has crossed up, and this is what I said, you know, sometimes when you just close a green candle, it just surges this up. So this is what gives that I've seen it before, so I knew it was going to kind of come up to this level here at like 76. So this is when you have this like surge up and it goes sideways, it's kind of this impression of weakness because it didn't really give you anything with that green candle. Why did it close green and not go far? You know, no volume behind it. But you are getting the rising sun potential with the cross up of the leading MACD. Cross up of the baselines. We could see a 4-hour play if this plays ball. 6-hour time frame reclaiming the baselines as well. 12-hour. Give me a second, okay? And yeah, this is the bullish divergence on the 12-hour of the money flow here. Interesting to note. And with that, ladies and gents, I will leave you to enjoy your Sunday with your families, and I will catch you on the flip side. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you